Hi, welcome back to the Futures Trading Hub. I'm A2 Trader, your host. And I will be talking today about my favorite, hands down, indicator, and it's called the candle X-ray. I got tired of guessing about what was happening on my screen. If you're using a 15-minute, a 60-minute candle, you got to wait almost an hour with a 60-minute candle. You got to wait an hour to understand what's happening in it. You just don't know. So this candle X-ray helps me understand what's happening on the screen in real time. And I can make decisions in real time. Now, this indicator is not on any platform. This is something that I designed based out of the need I just explained. Now, I can make this available to you at a very, very low cost. So please just email me if it's something you want to look at. We can talk it through, or we can talk it through an email anyway, and we can decide if it's right for you. Now, one of the things that the other points I wanted to make before we jump into it is, one of them is this is the 5th episode, and with the 5th episode, I made myself wait till I had 5 episodes ready before I launched the site. So you're going to start seeing, or I hope you have seen, some of my marketing ads come across that try to drive people to this site. I'm looking at 15 different ways of driving people to the site. I don't want to spend a lot of time doing that because I want to spend most of the time delivering content. But if you did get here, please share this with your friends, and we can make this site much, much better. I've got a lot to share. If you remember, we were going from an automated strategy where you're sitting there watching the system follow your prompts and do what you told it to do with no interaction. So we're taking that's hard to get to because there's a lot of things that go into building that type of a strategy. So I've got a lot to share because I'm going to be going through all the little steps it takes to get there. And that's a lot. There's a lot of steps. You don't want to actually walk them. But I also want to know what you want to see, right? What would help you today, immediately, right out of the gate, that I can help with? So send me messages. Put your comments down below, or you'll see the multiple communication ways of reaching out to me. That'll be in the middle as well as the end of this video. So please let me know what you want to see. So I just mentioned I'm going to be including a new thing today, and that's going to be a list of my contact points, social media contact points, emails, websites, which will be published soon, so on and so forth. Now you're going to see those at the middle and at the end. So as we go through that, just jot down which method of communication you feel more comfortable with, and just place it on your desk, and feel free to reach out to me for anything. I've also wanted to mention on one last point, I am also a trading coach as well as a strategy developer. So if you already have a strategy, you've already got something you know works, you've already tested it, back tested, or you're doing it today manually, but you want to turn it into automation, reach out to me. I can help you, or I can point you into the areas of other people that can help you. And I'm also a trading coach. So if you're trying to sharpen the pencil on something, or you want to overcome obstacles quicker, or really just about anything that you need that would help you, reach out to me on any of those contact points, and I'll be more than happy to help. So that being said, that was really what I wanted to say up front. And let's get going. Let's go ahead and get into some charts. I want to show you what this candle X-ray is before we start getting into charts. All right, let's get going here. I want to talk about candle X-ray, my favorite indicator by far. This indicator is designed to improve your confidence. It's designed to improve predictability of price. It's designed to improve and reduce your stress levels and anxiety levels during your trades. It's designed to understand and build the strength behind price action. Watching price move and being able to predict, as I said before, where price is going to go next based on historical as well as built-in facts. The other thing you have is consistency. in your trading, obviously, when those top four things happen, you tend to be more consistent in your trading plans, as well as your trading outcomes and your profitability. Price insights. You're going to be able to understand where price is going much, much better with the use of this indicator. And you're going to love this indicator. I can't wait to show it to you, because quite frankly, a lot of you folks were brought up on supply and demand, right? Resistance and support. Those types of building those types of zones and understanding what where price is going to turn around. This is going to help you validate that zone, because as we're going to find out in a few minutes, volume is everything. All right, so we want to see what happens inside a candle. In order for us to be able to predict what we expect is going to happen, we have to understand what's happening inside of it. And as an example, we could take a 15-minute chart. This 15-minute chart I've got highlighted one candle, right? One candle and one 15-minute chart. Somewhat of a doji, but we cannot tell anything that happened in other than we know it went all the way to the high, all the way to the low, and where it closed at. That's what we know about it. Same with the 5-minute candle. If we look at this 5-minute candle, we see a little bit, we understand why it went all the way to the high, all the way to the low, and then why it ended up at its exit point. We can see that, but it still doesn't tell us anything about what's actually happening inside that candle. Look at it from a 1-minute perspective. From a 1-minute perspective, we see a lot more. The shaded part shows that same 15-minute candle, and those same 3 5-minute candles shows them in 1-minute candles. Now, we can see a lot more, but we can glean a little bit about what was happening there, right? We can see very little, a lot of movement here from the perspective of down, up, and out. We see there's a strong movement down there. There's a strong movement down and a strong movement up. So we can see glimpse some things, but not really enough to make determinations on. And the same goes for the 610 tick chart. We can actually tell a lot more about what's happening with this 610 tick chart. As a matter of fact, for the particular Everest strategy that I use, I see 2 entries and 2 profit targets in this alone. So, but you can tell and see what really is happening inside the 1-minute, the 5-minute, and then finally that 1 15-minute candle. But what you can't do is understand what goes on inside the 610. So you always get to the point where where you can only go so far. How do we know if something's strong or it's weak? A candle's strong and weak. We're basing it on the amount of movement it makes. The size of the candle is what we're basing that on, whether it's strong or not. And that's not a very good measure of strength of a candle. So let me introduce you to the candle X-ray. It's basically built on volume. Volume is the main value prop I would add to trading. If you're not looking at volume, you're missing an obvious indicator which will give you obviously value. Right now, when you have strong volume, you have a strong market. You have strong moves. When you have weak volume, you have a weak market or weak moves. Basically, a weak market, anything can happen. There's no predictability to it. When you have strong volume, there is predictability, and there is usually good solid movement. You'll see over here on this lower right-hand corner, you can see that there is this indicator that's added here below is candle X-ray. And this candle X-ray we'll explain in just a few minutes, but you can tell how these charts and how these charts show this particular candle shows a huge amount of volume to the downside. Huge amount of volume to the downside. And it shows it went all the way down, came all the way back up, and then exited. But that amount of volume goes to tell you that it's going to continue on its way. Usually. A lot of times that volume means as long as it's built on a reversal. So we'll go through all the rules later on as we move through into this. But as I introduce you to the volume X-ray, all you really need to understand is that volume means it's strong. You can predict the movement based on the strength and on what you've learned previously about this indicator. You can see over here where it wasn't as long of a candle, and it was a little bit more balanced. It's not balanced, but it's a little more balanced. But you can see how this pushed these price the action down, and then when it took it back up on lower volume, which means it's unpredictable. So when volume goes from high to low, that's when you have to take view of what's happening. All right, well, this is candle X-ray. This indicator can be used on any type of chart, a tick chart or minute chart, day chart, doesn't really matter. The higher you go up, the harder it is to distinguish between the buys and sells, though. Standard statistics defines that. These candles are representing a couple of different things. First of all, the red is the down volume, and the smaller green candle within it is the up volume. This candle here on the far left, there's a big disparity between the buyers and sellers, but it's just barely above average, right? It is really just barely above average. So it does say that buyers own the candle, right? But there's there's not a lot of strength in the candle itself. And here you show a green candle that goes all the way up past the first standard deviation, which is important because it's telling you that they own the candle, plus it was a strong candle. And then here you have the sellers outnumbering the buyers, the disparity between them. It still is it's higher than this one, but it's still a strong candle for the bearish side. And then you have these two candles here, which are barely average, and in some cases they match each other. You'll see that a lot. In some cases there's a small discrepancy, but they're still just at the average. So what that tells you is there's no disparity between them. They just discount the indicator's weighting of that particular candle. Okay, I've added in this normal distribution curve just to illustrate our three measuring points. Now, if we can customize how far back we want to look from a candle X-ray perspective to define these. Let's say, for example, for sake of measuring, we use 40. So we look back 40 candles from the current candle, and that means 20 of those candles would have come up higher, and 20 of those candles would have been lower. This first standard deviation is 68%, 68.26%. So this line represents where 68.26% were below it, and the remainder was above it. Now, second standard deviation is 95.4, and that says that 95% of those 40 candles were below that, and 5% were above it. So that's what that's what this measures. I wouldn't worry about this. What I would simply say is it's strong if it goes close to the first standard deviation, and it's extra strong if it goes above the second standard deviation. So let's now look at how we can apply these to charts. Okay, let's look at this from a 5-minute candle, applying the candle X-ray to it. So you can see that there's a lot of bearish candles, right? At the open was a bit bearish. It was strong, but look at the next two 5-minute periods. It were strong, but it was neither bearish or bullish. Even though you can read something from the candle, you can look at this and say, okay, that doesn't matter to me because it wasn't bearish or bullish, so I can't make a decision on it. But then you get to this one, it's still strong, but it's bearish. So you can make a decision that this is a strong bearish candle, right? So the standard deviations and the average, you see them vary a lot here. Well, in my charts, I look back 21 candles to come up with the average, the first and the second standard deviation. And before the open, the candles are very, very, very low volume. So it's way down here. And then it starts to build based on these candles here. But my 610 matches out pretty well. But these particular ones, they go up and then they come down. And they go up because they're low, and then for a while they're using these candles, which makes it very, very high, and then it brings it down to a normal standard. But you can tell pretty easily what's strong and what isn't. If we look at a 15-minute candle, it's the same type of volume pattern, But you can see this might have been bear or bullish, but it's not by much. It's harder to tell. The higher you go up in minutes, candles, go 5, go to 10, 15, 60, the closer these are going to look. And that's just the law of statistics will drive that. You can also see the change in the average. So this is harder to gauge, but you can gauge these are not very, very strong because of how it looks with everybody else. But these candles are pushing this standard deviation up. The way you can fix that is by looking at a smaller time frame. Now, if you look at a 610 tick chart, see how flat it is? Well, the thing is you get 21 candles like within 2 minutes. And so you've got a pretty standard basic one. But nonetheless, you can also get more descriptive here. You can see down here where there's bearish, and you can see over here where it hits the first standard deviation, and there where it almost hits it. Those are strong bullish candles. This is a strong bearish candle. And you'll see when we start going through actual trading examples, we'll see how we apply this. But right now, I just want you to know this is you measure this as a strong bearish candle. These are actually fairly strong bearish, but they're just average. But there's a big discrepancy between the buyers and the sellers. That's what makes the difference. If you're average without discrepancy like these two, they're average without discrepancy down here on candle X-ray. That means that you can't draw conclusions based on either one of them. Okay? So let's go looking at the charts. Let's look at some charts. We're looking at candle X-ray, and we're looking at it from the perspective of 3 charts. We have a 610 tick chart here. We have a 15-minute and a 5-minute tick chart. 5-minute chart. Now, the volume's down. It's Friday afternoon. You can see the market is tumbling today. It's because of some economic news. It's been going down all day long. It's actually been a really good trading day. But nonetheless, we're looking at this 610 tick chart. We'll start here, and then we'll look at the others. So to keep this in perspective, a 610 tick chart means there's 610 change in prices, and it builds a new candle. It's not the amount of contracts bought or sold. So to illustrate that, I'm going to bring in a time and sales window and stretch this out so we can see that a little closer. So with the time and sales, you see every one of these I can't stop this obviously, but see every one of these that are highlighted, and then to the right there's a plus or a minus next to it. That's the number, that's the price change. That is a tick. That is a change in price. See the ones that are not highlighted and they have the size here? That's that's just buy and sell at that same exact price that it was. And here's the volume size. You'll see some pop up in higher volumes. And on Friday afternoon, you'll see a lot that'll be later in the day. You'll see a lot of these where there's multiple contracts. So you can tell that this is doing some pretty good movement. Now I'm going to go through this. This is my next indicator to go through. So I'm not going to go through that any more than to explain that the candle itself is built off. They count up 610 of these highlighted contracts, and once they reach 610, it builds a new candle. So that's just for perspective. Okay, I'm going to close this up, and we'll look at it from the perspective of the 610 tick chart first. Again, market's tumbling all day, but it looks like it's starting to make a turn. My moving average is red. It looks like it might be it just leveled out to neutral, so it could be the market could be going up. Now we're seeing down here in the candle X-ray, we're seeing the current candle build and go to hit 610. Once it hits the 610 ticks, no matter what the volume happens to be, it will create a new candle. Now you can also see as it builds, you can see the race right? Right now the buys are at 94 and the sells are at 135, right? So the sellers are a little bit ahead. Now these candles are they're gonna build and build. Now, look, if this continues to go up higher, we can actually see it like it just jumped. We can actually expect a drop in price. Now, what this will probably turn around at is right here on this Donchian mid channel. It will likely turn around and we'll see some buys coming in, some more buys than sells. And as this candle builds, we can watch it over here, or we can just watch it here, and we can try to gain perspective. Like I said, it came down. It usually hits this and turns back around, and you can tell the disparity is quite a bit right here. Let's see how far it goes, though. What we're concerned about is how far does it go above this average line. So we'll let that play out here for a minute, and I'll go back. Then we'll go back in time and look at some of the more volatile activity this afternoon. See, now if the sells catch up to this, there's a good chance that this could continue down. If it doesn't, there's a good chance it could continue up. Looks like it's catching up. So they're right about even right now. So you can't even see the red. They're just about even, and it didn't quite hit the average. So what that tells me is that this could likely continue downward. But let's look at this from the perspective, and you'll go, yeah, you'll think, yeah, that's going down. And it is, but not with much. There's not that much disparity. It's coming out now. But if it's going down like that with not that much volume difference, then it's really a weak candle. You do not want to base decisions on this until you start seeing some. Yeah, now you're starting to see it, the disparity between the candles, between the buys and the sells. So now this is now becoming a lot stronger to the downside than it was just even a few seconds ago. So you can see how this will help you make decisions, right? Now, I'm going to try to pick a zone just from a very basic perspective. Now, those of you that don't know anything about supply and demand, don't worry about it. We're going to go over that in like 3 segments. There's multiple things to talk about in supply and demand, a lot of ways to look at it. And I have my own special way that works really well, but you guys can, however you learned it, up to you. Just feel free to use it that way. But I'm going to show you how I use it. And so don't worry about it if you're not aware of it. But right here is a zone. For multiple reasons, it's pretty good zone. Right here, we'll call this a zone. I really wouldn't normally, but we'll just use it for the sake of exploration. So if we look at these 2 zones in particular, this supply zone up here has got a lot of volume associated. It's strong. A lot of strength there. This zone will hold up at least once. And again, you'll hear later, I don't use zones to enter trades. I only use zones to exit them. Right? So where this would be valuable to me is if I'm long and I'm coming up towards this zone, I would get out right here. That would be my exit, because it will turn around at least once. And later on, you have to determine whether or not, after the first one, you have to determine whether or not it will hold on the second and third. But right now, this looks strong. This zone here, look at the volume. Now, there's a lot of volume because of the day, but the volume is much less, right? Between the volumes between here, and here, and there. Look at the volume for right here. For this candle itself, the candle that comes out of the zone, which we could add that to it if we wanted to, but the candle that comes out is one of the weakest candles in the day. And the one right next to it's not strong either. None of these are hitting the average. So what I would say is, this is a very weak zone. So if you guys are looking to use zones in whatever way you use them, be careful when the volume is not supporting the zone that you chose. Now, there's multiple ways of picking zones. I just wanted to use that as an example. I don't really see any others right off the huff. maybe right there, because there's a pointer to the zone. In my rule, there has to be a pointer to a zone before it's a zone. Like right here, there's no pointer to this zone, none, as well as low volume. So it would not be a zone to me. Up here, there's no pointer, but there's pretty good volume, so it still tells me that it's strong. So that's how I use this associated with zones. Does that make sense? All right, so candle X-ray itself we'll use together, right? So if we look at it this way, now this is the micro market right now, and don't know where it's at, but you can see as the contracts build up, again, it's a 610, we already looked at this, but I look at the market depth, the time in sales, which we'll talk about in the next segment, and then the candle X-ray, as well as I use the 5-minute to try to understand, am I actually going into a zone? Because I exit on zones. Again, like I said, I don't enter, but I will exit on zones. Because zones will pull back, and with my strategy, if it pulls back very much at all, it'll take me out. So I don't want to enter short in a demand zone, and I don't want to enter long in a supply zone. It's just that simple. As well as I want to get out of a long in a going into a supply zone, and get out of a short going into a demand zone. Again, we'll talk about that in the next segment. So that's it. That's how I utilize this particular indicator, and how I build it, how I set it up, and how I utilize it. So if there's any questions, I want to make sure everybody understands this. I'm going to put out a segment probably every 4 to 5 days. So more than one a week, but about every 4 or 5 days. If you have something you want me to focus on, please let me know. Drop me an email, put it in the comments section, or drop me a Facebook message. You'll see that on the next chart. I'm happy to help. I want to help where help is needed. I don't want to just be doing this if nobody wants to use it, be going through these motions. I want to make sure that we're hitting the targets. Show your friends, share this, please. The more people we have looking at these indicators, these hacks, I call them hacks. Like you'll see my email is the futures trading hacks, right? Hacks, tips, tools, tricks, everything we learn that helps us overcome the obstacles that where a lot of people are still at. They're frustrated. They're just not making the trades, not getting their return on their investment. It really is a terrible thing. But nonetheless, that's what we're here to do. Help you get over it. Again, if you want this indicator, drop me an email. I'm happy to talk to you about it. Or if you got another platform and you want me to write the code for for this, or if you want me to, or if you just want to talk it through and figure out how to do it yourself, feel free to give me a call or drop me an email. We'll schedule something up. All right. So hey, stay tuned. Still, I'm leaving the chart section, but we're getting ready to move into the what's coming up next. So stay tuned. Here we go. So next in segment 6, we're going to talk about time and sales. We talked a little bit about it today, but we're going to talk more about it and how it associated itself with orders, how it associates itself with charts, how to set it up, how to read it, what it's telling us. And then in segment 7, we're going to pull it all together and start talking about our in-trade confidence. So if you think about it, anxiety builds during the middle of your trade, not when you're not in a trade. So we often make mistakes based on that anxiety. We want to reduce the anxiety, increase our confidence. And so we're going to talk about how we pull all these together so that our in-trade confidence is as strong as it can be. That way we won't make mistakes. So until then, happy trading. I hope you enjoyed this segment.